Hi, this is Dennis Williams with CashMap, and thanks for joining me for part 1 of a 3-part series called A Picture Tells It All. We've all heard the adage, a picture is worth 1,000 words. And the exhibits that I'm going to share with you, when I share them with others, the power that a line of credit provides you in keeping your money at work, enabling you to accelerate getting out of debt or just building your wealth became crystal clear. So let's get started. The first concept I'd like you to remember is that your line of credit works just like a checking account. So for example, we're going to start the example by taking $5,200 out of our line of credit and making an additional payment to our mortgage. On the same day, our income comes in for $5,025. $5,200 minus $5,025 is $175. Now, in a line of credit, when you have brackets around a number, that means that that is what you owe the bank. So our goal is to minimize what we owe the bank all month long. And this is why we move our income into our line of credit. It enables us to keep our balances very low. And with a low balance, that means you pay minimal interest. Similarly, in the middle of the month, we're going to make our regular mortgage payment. We're going to use our grace period, which for most banks is 15 days. And when you use your grace period, there are no late fees and it does not adversely hit your credit score. Now the bank calculates what you owe them based upon the average daily balance. The average daily balance is calculated by adding up every day's balance and dividing it by the number of days. So, for example, on the first day of the month, $175 is the average daily balance because it was only one day. Now, if we wanted to calculate the average daily balance for the first 17 days of the month, we would add the balance for the 17 days, which equals $5,525. We then divide that by 17 days, which is $345. At the end of the month, near the end of the billing cycle, is when we end up making the rest of our household expenses. And in this case, this is when my credit card is due. But I can literally call my vendors and to rearrange the dates that I owe my bills to best suit my purpose so that I keep my money in my account as long as possible. At the end of the month, when I add up the balances for each of the days and divide it by 30, the average daily balance is $1,168. And since my line of credit is at 4.5%, I take 4.5% for 1 month and multiply it by 1,168. And for the month, for borrowing $5,200 from the bank, I owe them just $4.38. Now, what's the effect of that $5,200? Well, I sent that $5,200 into my mortgage, which dropped my balance to $227,000. That, in turn, enabled me to skip 17 payments that I normally would have made using the conventional approach. So we can say that for spending $4.38, we saved almost $18,000 in mortgage interest over the life of the loan. That's a pretty good return on your investment. And the best part is, you didn't touch your savings. Now let's go back and just talk briefly about billing cycle dates. The opening date is the first date of the new billing period. So in this case, it's the first of the month. The last date is the closing date, which is the 30th. You want to know what your billing cycle date is because financial institutions do not all use a 1st through 30th billing cycle. For example, if the opening billing date was on the 4th, that means the closing date would be on the 3rd. CashMap, which is an iPad application, enables you to create personal scenarios that enables you to see the power of putting your lazy dollars to work all month long. And with each solution that you create, you see 15 years into the future. Your solutions are confidential and we can't see them. To learn more over the principles behind putting your dollars to work and using a line of credit, visit my blog at www.dennis-williams.com. You can email and ask questions or also offer topics at dennis@cashmapconsulting.com. You can purchase CashMap in Apple's App Store, and I'm also available for personal and company consulting. I want to thank you for joining me for part 1. Thanks for watching, and tell a friend.